Tom Bowley, Chief Market Strategist here at EarningsBeats. Hey, good morning, everybody, and welcome to this Thursday, January 25th, 2024 edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats, and I'll be with you for the next 30 minutes or so as we prepare to open for yet another trading day. Currently, we got futures. Well, let me give them to you. The diamonds tracking the Dow Jones up 0.2%. We've got the spider currently up 0.4%. We've got the NASDAQ, the QQQ, currently up about 0.5 or 0.5%. And finally, the Russell 2000 IWM up 1.23%. Now, this is the third day in a row that we've seen a pretty big gap up out of the IWM. It's going to be very disappointing to see another big sell-off because that's what we've seen really the last couple of days. I'd like to see it gap up and then continue pushing higher and take out the recent highs. Yesterday did end a streak of, I think, 4 consecutive days where we had higher lows going in. So we had a nice uptrend. Yesterday squashed that. But we are looking up again here at the open. We'll see what happens after the opening bell today. But it'll be nice to see a day of accumulation. That remains to be seen. It's a rough day if you own Tesla. Tesla came out. They missed their revenue numbers. They missed their earnings number. Stock is being treated as though they missed both. Down $18 this morning. That's down 8.67%. Back down right now just below $190 a share. We have not seen, let me tell you when the last time we saw Tesla below 190. It was back in May of 2023. So it's been a long time. Tesla had not been trading well going into earnings. Actually, I talked about this last night in the Q4 earnings webinar that we had. And I had a specific question about Tesla and what I thought of it. And, you know, I keep wanting to say it's going to go higher because I do like the company long term. But in the short term, the chart is not strong at all. Automobiles have not been performing well relative to the S&P 500. Tesla certainly has not been performing well here in 2024. And we found out why last night with their earnings report. So not very good news there for Tesla last night. We'll see how they recover throughout the trading day. Is this an opportunity? Do investors find this to be an opportunity, or is this going to just be the start of a much further sell-off? If you recall back, I think it was in January 2023 that Tesla hit a low down around $105 a share, somewhere in that neighborhood, maybe 103. 189 is still a long way from that level, but that would be the key long-term support level for Tesla. So we'll see how it reacts to today's initial sell-off, and then we'll go from there. Tell you what, I got a bold. I'm really being bold today. I'm going to try and go through all 100 NASDAQ 100 stocks to give you what my quick, very, very, very quick take is on all 100. And I'm going to try and do it before 9:30 this morning. So it's not going to be easy. I still got some other things we want to go over. So let's jump in, take a look at the action from yesterday. First, we had the Dow Jones Industrial Average down about 99 points. That was roughly 0.25%. S&P 500 up about 4 points. NASDAQ up 95. So on a percentage basis, up about a little bit more than 0.5%. But mid caps, small caps, even after strong opens for the last 2 days, seeing selling during the day. And you can see that in the form of these AD lines turning back down again. I really don't like to see that. So with today's gap up, I'd like to see follow through to the upside. But yesterday, mid caps down 17 or that was down about 0.6%. And the IWM falling 161, which was down about 0.8%. Transports down just a little bit more than the small caps, down almost 0.9%, falling 137 points. And again, you can see that little rolling over of the AD line on these last 3 charts that I just talked about. Not quite so much on the others. We do have a little bit, but not quite as profound, I guess, as the mid caps, small caps, and the transports. Moving on to the sectors, finally saw some good action in the energy group. Don't blink, but we now have energy up for, I think, the 4th day in a row, trying to get back through its 20-day moving average. Didn't look very good when it lost $80 support, but as I've said before, this is a group that I struggle with in terms of it following the norm in terms of technical analysis. Had a breakdown 4 days ago and rallied right back off of it. Can we get through the 20-day? That's going to be the first. That would be the first sign of repair, solid repair anyway, on the energy chart. Technology also did well yesterday, rising about 0.7%. New high. Technology stocks just keep going up. The XLC Communication Services, really nice move yesterday as well, up 0.6%. Now above the $76 level. Among industry groups, specialty retail gaining about 4.3%. Really nice breakout here. You can see the move up, nice little cup, pulled back close to that 20-day moving average, and then blasted off yesterday. Really nice move in specialty retailers. Non-ferrous metals, a big push to the upside as well, gaining more than 4%. This index pretty much just follows Freeport-McMoRan, if you're familiar with the stock. FCX, as it goes, so goes this index. And then finally, can't have a day without talking about the semiconductors going higher because they seem to do it every single day. And they did it again yesterday, rising almost 2 percentage points. And you can see this is why you've got to be careful about following negative divergences and using them as your primary indicator. I want you to take a look when semiconductors first made the breakout above that December high. Right in here, when it got up close to 12,000, look at where the PPO was. We had a negative divergence. It's clear as day. Higher prices, that PPO was lower. You've got to let these breakouts play out because many times they'll do what exactly the semiconductors did, break out, continue moving higher, and eventually the PPO moves to a new high. And the thing is, when you're looking back with hindsight right now, you don't see a negative divergence. You're like, what negative divergence? Higher prices, higher PPO. I don't know what you're talking about. Well, what I'm talking about is when it made the breakout, there was a clear and distinct negative divergence in play. This is why it can't be your number one primary indicator. I don't like to hear folks say, oh, well, this gain, we now have a negative divergence. I'm going to sell. How well would that have worked out with the semiconductors? Not very well. You've got to see how far they go. You need to see some sign of a top. The problem is when it first breaks out, you don't know where that rally is going to end. It may end with that PPO breaking to a new high, which in the case of semiconductors is exactly what it's doing. In other cases, you might see that bearish engulfing candle or that shooting star on major volume. And that would tell me that, hey, possibly we've got the top in. Oh, and by the way, there's a negative divergence along with this reversing candle. Then you start getting corroborating evidence. Anyhow, just wanted to point that out because semiconductors didn't look so great 2 weeks ago looking at the chart when you look especially at the divergences. Now, what divergence? There's no negative divergence in play. Moving on, 10-year Treasury yield. I want to go through. I have not looked at the economic reports yet this morning, believe it or not. Was running a little bit late, but I wanted to check out GDP. I did hear that it was higher than expected, and it was much higher than expected, actually. Quarter over quarter, the annual rate consensus estimate was 2%, came in at 3.3%. Now, I said earlier in the week that if we got a stronger than expected GDP, look for the 10-year Treasury yield to take a big push to the upside, maybe break above 420. Well, we got a much stronger GDP, and as a result, we see the 10-year Treasury yield down 4.5 basis points. That's odd, but apparently, I would guess that the bond market, even though we're showing stronger economic numbers than we expected, I think the bond market's saying, yeah, but there's no inflation. And if you get that kind of response where growth is stronger than expected and you're still coming straight down from an inflation peak, I've said it before, that's nirvana for stocks. I'm not surprised that we see futures up again. And I'm not surprised technology is broken out. Semiconductors are broken out. The overall market, the S&P 500 is broken out. Touched 4,900 yesterday, by the way. I didn't even talk about that, I think, but if you go back here, right here, we hit 48, or we closed at 48.68, but the intraday high, which we'll look at in just a minute, was over 4,900. Anyway, 10-year Treasury yield earlier today got as high as 419. I've been talking about maybe 420 being that high, intermediate kind of a high. and 380 or 379, 378, whatever, being that support level to the downside. So I believe we're going to end up moving back down. This threw a monkey wrench into it, though, with the GDP higher. Let's see how the 10-year Treasury yield trades throughout the day. I still wouldn't be shocked if we finished over 420 with the stronger GDP. Normally, stronger economy means you're going to see some selling in bonds because you're going to get money rotating away from bonds to stocks. If you got stronger economy, probably means more profits for S&P 500 companies, and as a result, expanding multiples, higher earnings per share, and that takes the market higher in terms of valuations. So that's the normal rotation that you would see. Get out of bonds, send the yields higher, and move into stocks and reap the rewards of stronger profits. Not really seeing that. We're actually seeing money rotating into both bonds and into stocks. So see whether or not that can last. Other economic reports, because we do get more. Thursday, of course, is initial jobless claims. So let's see what that came in. Remember last week came in unexpected, well below 200,000, hit 189,000. This morning, looking for 200,000, we hit 214. So kind of a mix in terms of the economic conditions. We had higher initial jobless claims than expected, which would mean maybe a little slowing economy, but we got a stronger GDP than expected. So a little bit on both sides there. I think we may have had another report or two. Durable goods orders are out. The estimate was for new orders to jump 1%. They were flat. And if we strip out the transports, they were expected to jump 0.2%, and they jumped 0.6%. So again, a little bit of a mixture there. And finally, thought we had one more. Well, retail inventories, I don't really look that closely at it, but it did jump significantly. So probably worth following at this point. It was expected, well, I don't have expectation, but last month, which would have been November's report, the retail inventories rose 0.1%. December, retail inventories jumped 0.8%. That's a big jump in inventories. So that could be a sign of the economy not being as strong. So again, a mixed signal based on what we saw with the GDP. Anyhow, let's keep moving because I got a full schedule. I don't know if I can get through 100 NASDAQ stocks, but I'm going to give it a shot. S&P 500, a little bit more of a black filled candle there, but still we finished above where we closed yesterday. So no sort of bearish engulfing or even dark cloud cover. Instead, just I'm looking at these last 3 days and we're not seeing as much follow through. And we've got a gap up again today, on apparently in line based on what I was just looking at on the futures. And so, this gapping up and not really going anywhere during the day eventually could be a short-term top. That's why I want to see not only a gap up, but I want to see some follow through. I was talking about that with the Russell 2000, but it also would apply here to the S&P 500. Not really seeing a lot of hollow candles since we made that breakout above 4,800 last 3 days. Gains have been strong. I mean, we're moving higher. That's good, but not really following through throughout the trading day. NASDAQ 100, same thing. That's a shooting star candle. Volume did pick up. A gap down here would have left it on an island, but as I said, that's not really what's in the cards. I'll look one more time here. Got about 15 minutes or so, 17 minutes to go to the opening bell. And the QQQ still up now. It's up almost 0.6%, 428. So QQQ looks like, futures, we're going to jump up again. The question is, can we hold it? Can we continue to move higher into the close today? That would be something different than what we've seen so far this week. IWM, that's what I was talking about. The gap ups 2 days in a row, gapping up to around $198. And then you can see the red filled candles. This doesn't look even as good as what we saw in the S&P and the NASDAQ, which concerns me. But we did break above the 20-day moving average. And even with that weakness yesterday, we closed just above it, closing at 194.36. And the 20-day is at 193.97. So we are still holding the 20-day moving average. Breaking back up above these two highs from the last 2 days would be very bullish, but we got some work to do. IWM right now, 197.23. To get back up to those highs, we'd need to get a little over 198, probably get to about 198.5 or so. So still some work to do intraday, which is where the IWM has struggled the last few days. All right, transports. Transports did reverse down. We did put lower low, lower high in. Be interesting to see with futures up whether or not the transports can make another push to the upside. They do continue to trade above their rising 20-day EMA, though, which is a positive. Moving on to the chart of the day, we've got our website over at EarningsBeats. Make sure you come in, check us out. We do have a free Bowley Trend Market History report. You can click there, get a free download to learn a little bit more about the history of the market. It's fascinating. If you haven't seen that, you should check that out. And if you want to become a free EarningsBeats Digest subscriber, right there, name and email address, all it takes. It's free, no credit card required. You can unsubscribe at any time. Comes out 3 times a week, Mondays, Wednesdays, and Fridays. So you'll get another one tomorrow. All right, chart of the day for today. I wanted to look at the KRE because this is an area of the market that I really like. And I pulled it up. This is the regional bank. So a lot of the smaller mid-cap regional banks are in here. I pulled it up on a weekly chart because I believe for the last couple of years, this is the strongest this group has been. You can see it in the weekly PPO. I mean, weekly PPO pointing higher and at 5. Even with the recent pullback, the PPO did not pull back at all. We continue to show more and more strength. We reversed last week. We're adding to it this week. And when I look at it, you know, we bounced back up through the 20-week moving average, the 20 weeks above the 50. We pulled back. We held that 20-week, and now we're threatening another breakout. A breakout here would really, it would be the first time we've seen anything this bullish since probably back when we took out the high from June 2020. This was just after the pandemic, when we cleared that in November and had that huge run. This whole time period, banks did well. We had, I believe, transports doing well. I know small caps outperformed. It's kind of setting up again like that. And I think the KRE is going to be one of the keys to the small cap index this year. So watching this perform better and better, looking for that next breakout. But as long as this continues to trade above its rising 20-week moving average, I would not sleep on the banks. I think this is a group that could be one of our leaders in 2024. All right, I got 13 minutes. Can I get through 100 NASDAQ stocks in 13 minutes? We're going to find out. I'm going to go through, these are all 5-year weekly charts, and I'm going to start, they're going to go in alphabetical order. I'm going to start with Apple. Apple looks to me like we got a nice uptrend, cup, possible handle here. Breakout would be bullish. Airbnb, still got a lot of overhead resistance. Looks like maybe off the top, some sort of a inverse head and shoulder kind of a thing. Breakout above 150 would be bullish. Adobe pulling back. Looks like maybe it broke out of what was a bullish wedge. Now trading above both moving averages, looks bullish. Analog devices, triple top up here, 202.50. Pretty clear, needs to get through. ADP reversing candle yesterday right near this resistance and gap resistance. Got some work to do, needs to hold the 20-day. Autodesk breaking out, negative divergence. But remember what I said. Let's see how far this rally goes. Keep putting in higher highs on this rally. Maybe it keeps going. We wipe out that negative divergence. We'll see. It takes a little bit more on the weekly chart. AEP, this just doesn't look good. Broken down below the moving average, has been trending down. Don't like it. Align Technologies. This one, I mean, we got a little, break to the upside, failed to hold on the 20, really needs to hold that 50-day moving average and gap support. Applied Materials in the semiconductor space, lagging other semis, but really starting to pick up. Looks really good to me. Nice volume accompanying this move to the upside. AMD, what do you want to say? It's a tree growing to the sky. I don't know where it's going, but it doesn't seem to ever want to come down. I love it for the long term. Obviously, it's being accumulated for a reason. Amgen, really strong stock, but on this attempted breakout right here, negative divergence. I don't like that candle from yesterday. Short term, unless we can get a breakout, I'd be careful with Amgen. Amazon, making a breakout here. Been a slow mover to the upside, but with earnings, I think this one could maybe jump. A lot of the retailers starting to do a lot better. ANSS, excuse me, had the big gap up back in December, pulled back. Now starting to try to move back to the upside. I would watch these recent lows down around 320, 330. ASML, big breakout yesterday with earnings. Look at the volume coming in. Hard to really argue with any semiconductor that's breaking out. Broadcom, love the stock. Talked about the December seasonality being so strong. Well, it's continued right into January. Beautiful move on Broadcom. AZN pulling back. Let's watch this 50-day moving average. 65.5 would be my stop here. Biogen, been downtrending for quite a while. We saw Amgen going up. What's going on with Biogen? I don't know, but I'm staying out. Does I have maybe a bottoming head and shoulder pattern? Breakout above 270 would maybe turn my head on that one. Booking Holdings, bearish engulfing candle, negative divergence. This is what you got to be careful of. If it fails to hold that 20-day moving average, I see a trip down to about 33.75. BKR been trending down, came out with its earnings, tried to rally intraday yesterday, failed, went back down to a new low. I think you got to be careful here. CDNS, Cadence Design, recently breaking out above multiple tops around 280. That's your support level, along with the rising 20-day moving average. Charter Communications, trend line, watch the trend line. It can break out above the most recent high. I think it takes out resistance and the trend line. CMCSA, Comcast, need to clear 44.75-ish. It is in a uptrend off that gap down from October. Need to get through that 44.75 area, though. Costco, love the chart. Don't love the divergence. Don't really have anything what I would call a big reversing candle at this point. I would just be careful if you lose the 20-day moving average. CPRT failing to break above the moving averages. We got it at first and we closed back down below the 50. It's as long as it holds right now around the 46.5, 47 level, I'm okay. Below that, I would be out. CrowdStrike, big move to the upside, another negative divergence, but how high is it going to go? We don't know yet. Looks good. Cisco, reversing candle. That looks like, I can't tell if it's bearish engulfing or dark cloud cover, but it's coming after a huge gap down. This looks like maybe a reaction move to the upside. I'd be careful with Cisco. CSGP, back up above the 50-day moving average, but haven't been able to clear these reaction highs around 85 bucks. Let me see that first. Until then, I'd probably be on hold there. CSX, definitely the PPO continues to drift lower. I just see a lot of sideways consolidation. We did get a bearish engulfing candle yesterday, but it's just been going sideways for a while. This is all still part of that range. So I think down to about 33.5, 33.70. I think that's an area where CSX would look pretty good on a buy. CTAS, double top, looks like a cup to me, pulling back. I think the 20-day moving average is good support there. CTSH breaking out above the December high. Still looks pretty good here, trending above the 20-day moving average. I believe it breaks out again. Datadog's been one of the better stocks here over the past few months. Big move up from 80 to 135. Pulling back to test the 20-day moving average. I'd like to see it bounce here. DLTR, Dollar Tree, moving back down, rallied back off of that huge gap down we saw in August of last year. Has been rallying, but now pulling back, getting a 50-day test. PPO centerline test needs to hold. Dexcom, DXCM, moving up that PPO, though. You can see it's really struggling to get any higher with that PPO. Watch for a possible move down to 120. EA, Electronic Arts, I think maybe forming a cup. Nice move up. Looks like a nice, well-rounded bottom. Move up to about 143, then look for a handle. eBay, I look at this long-term chart. I just see nothing. I would just pass on it. I'm not interested. Enphase Energy, these renewable stocks can do anything. They're all over the place. Had a nice rally, pulled back, really needs to hold this 100 to 102 area on the chart. EXC just broke down yesterday. Can't endorse this one at all. FANG in the energy space does have higher highs and higher lows, especially higher lows going in. Just watch, make sure 145 doesn't give way down the road. Fast breakout, heavy volume. I like the stock. Love that take in the PPO. Probably could get a little pullback, but back to 66 would be a great entry. Fiserv, a little bit of a bearish engulfing candle. Volume so-so. Negative divergence. I don't know. Just be careful on this one. If it breaks back out to a new high, you're good. If it continues to move lower today, possibly watch for a test of 135. If that gives, be careful. Fortinet, FTNT, water break. FTNT breaking out above this prior reaction high. I think it's got an open window maybe up to about 76. GFS, sideways consolidation, needs to break above 63. Gilead Sciences, huge gap down recently, took out both moving averages. PPO coming down. Interestingly, though, the AD line continues to push to the upside. We got to get back through this gap resistance, 80.5. Until then, not a chance. I'm not interested. Alphabet, you can see big move up, PPO going along. Only thing I would say about Google is that it is trending down relative to the internet group. That bothers me a little bit. I think Meta is a much better play. Honeywell moving down to the 50, coming back up. It's got resistance at about 203.50. Need to get through that level. IDXX, triple top, pulled back, hit the 50-day moving average. That's a level that I believe needs to hold, so watch 510 to the downside. Illumina, ILMN, I see after an uptrend, maybe an ascending triangle, equal highs, rising lows. A breakout above about 145 would probably send it up another $16, $17 to low 160s. Intel, nice move up. I see maybe another cup forming here. Look for it to move back to about the 51 level. Then maybe we see a handle go in. Intuit just got a breakout above this recent high. Would have liked to have seen a little bit more volume. But hey, this group software has been strong. I think the stock goes up with it. ISRG, nice uptrend. It's kind of looking like the last 2 days, the IWM. Gapping up, can't figure, can't hold, comes back down. But this chart definitely breaking out. I think your biggest support area is around 348 up to about 352. JD, been trending lower, bounced, but probably going to struggle at that 20-day, have no interest. KDP, Keurig Dr. Pepper, had like this area of consolidation between about 33.5 and 31.5. Broke it yesterday. Volume was just so-so. Need to rally quickly. Otherwise, this one could continue to fall apart. KHC, there's your negative divergence right there. Coming back down 50-day zero line would be probably a decent entry on that one. Clack, KLAC, this is KLA Corp. Another one like Applied Materials in the same space. Good volume, breaking out. PPO looks great coming off the center line. Lucid, part of the auto group, just horrible. I mean, you get a couple days. That's about all you can expect to the upside here. Lam Research, another one like Applied Materials, KLA Corp, breaking out, nice volume. That whole area of the market looks pretty good right now. Lululemon, I like this move back down to the 50-day moving average at the highs. We had a negative divergence, failed to hold the 20, and now got our 50-day test. I would be looking for this one to go higher from here. Marriott International, breaking out, broke out, negative divergence. But now all of a sudden, if you look at this high versus this high, you're seeing higher PPO. So the momentum seems to be starting to build here. I like the chart. Microchip, bearish engulfing candle. It came right at about this maybe neckline over here, went just above it on the open and then failed. I would expect maybe a pullback into the 88, 88.5 range. And then I would look for more strength. MDLZ double top, looks like a little cup, maybe a handle back to the 20-day. Not a real deep cup though, so maybe not a very deep handle either. MELI, Mercado Libre, beautiful move up. Don't like that candle from yesterday, but the PPO looks great. If anything, maybe a short-term pullback, anything around that 1680, 1690 level, looked like a good entry point to me. Here's Meta. This one's been the one that's on fire relative to the internet group. I suspect we're going to see a really good earnings report coming up on Meta. Still love that one. Monster Beverage, not very good last week or so. Need to hold the support level around 54. Moderna pulled back, maybe off of this uptrend, maybe a cup. I don't know, just starting to turn back to the upside. I'd like to see it hold about 96, 97 to the downside, and let's see that run back up to 115. MRVL Marvel breaking out above the high that we saw all the way back in May. Tried to get through in July, couldn't do it. Pulled all the way back, filled this gap, and now been very strong. Look at the volume trends picking up, and we made the breakout. Marvell, I think, looks pretty good. Microsoft breaking out. One thing that this chart doesn't show is it's just an average performer in the software group. Software has been doing great. Microsoft's been awesome, going along for the ride in the group. I like it. Any pullback back into mid 380s would be awesome. MU Micron Technology did get the breakout, pulling back a little bit. I think it's going to hold here, though. I wouldn't be surprised to see Micron make another jump. Netflix loved that breakout with earnings. Subscribers came in well ahead of expectations, new subscribers. And as a result, you can see very heavy volume. I like Netflix to go higher. I'm really interested, though, to see if the top of gap support holds today. That'll be key short term. NVIDIA, beautiful move to the upside. Again, like AMD, what are you going to say to this? This is one of those trees that aren't supposed to grow to the sky. This one keeps growing. NXPI semiconductor, NXPI, I think it looks like it's going to make another move back up here to about the 234 area. Move down, left shoulder, neckline, head, back up. That could be an area on the right side of the neckline. ODFL, sideways consolidation. Truckers trying to strengthen, though, recently. We'll see if this one can maybe make that breakout above 420, which is what it needs. To the downside, watch about 365. O'Reilly Automotive, ORLY, big breakout, 1,000 to the downside is your support level. Palo Alto Networks, great move to the upside. Trend is in play. I would be watching down around that 320 level. That was your breakout in the 20-day moving average. Paychecks, big gap down with earnings. Or, well, I'm not sure if it was earnings, but big gap down with volume for sure. Anyway, coming back up, getting through the top of that gap resistance area. I'd really like to see it hold 122 area and make a run for 128. PACCAR, PCAR, big breakout, big volume, AD line, great. Love the stock. I think it goes higher. PDD, and it's at 9:30 because I'm starting to see the updates now for today. PDD going sideways, needs to hold 135. Pepsi going up, pulling back 165, pretty good support. This is another one I really want to see move from here. A close below about 164.5. I'd be careful. PayPal trying to finally strengthen. It's still got a lot of work to do. I'm not quite yet convinced. I would pass on it. Qualcomm, big move up. Not really trading great against the semiconductors, but certainly improving the last few months. Great volume. Pull back to 145 or so. That 20-day moving average would be a great entry. REGN, Regeneron Pharmaceuticals, beautiful move up. PPO looks good. Any kind of a pullback to about 920, I think, looks strong. Rivian, just like Tesla, just like the autos, really struggling, gapping down today to the lowest level it's seen since back in June. Ross Stores breaking out, negative divergence with a reversing candle. Maybe we get a 50-day test. I would say that 133, 134 level is the big support area on the stock. Starbucks, can't say anything good about this one short term, except maybe we're starting to see the PPO turn up as we have maybe a new low. We would have a positive divergence right as we get down to gap support. But otherwise, be careful if gap support's lost. Sirius XM Holdings, been trending higher. Recent low down around 505, 510. Watch that level. SNPS Synopsis, I see a pullback, maybe a move back up to finish a cup off of a long uptrend. Team, another big breakout recently. I don't like that candle, though. Reversing candle, false breakout, negative divergence. This one I would probably give odds to be a little bit stronger, that maybe we go down to 220. TMUS, T-Mobile, breaking out, negative divergence. Want to hold that 20-day moving average. Tesla, big gap down. Are we going to see a big hollow candle holding this support area around 190? Or do we break down? Because if we break down, the next big low would be that April low down in the low 150s. That could be quite a tumble for Tesla. Texas Instruments breaking out, negative divergence. Still, I think as long as it holds that 20-day moving average, we're okay. That is a very weak stock relative to semiconductors, by the way, though. So I like a lot of other stocks better than Texas Instruments. All right, pretty easy to see on Verisk Analytics. We got a triple top of it about 248. We got to clear that. That would be bullish, by the way. VRTX, Vertex Pharmaceuticals, nice breakout. PPO maybe a little bit extended. I would still say, though, that rising 20-day moving average is likely to hold. Walgreens Boots Alliance pulling back, now trending below its moving averages, kind of following that prior trend. I'd have to see this one get back up through the moving averages. Warner Brothers Discovery, another one that's been trending lower, below both moving averages. I got nothing positive there. Workday breaking out. I like this one. I think your key support area is going to be price support and the 20-day coming in near that 280 level. XL Energy, XEL, big breakdown here. Continues to drift lower, not in a great space. I would pass. Zoom Video Communications. I mean, so many tech stocks going up. This one still cannot get through $74, $75. To the downside, long-term support at 60. That's the range we're in. I need to see a breakout one way or the other. Zscaler, really strong stock. I love this breakout here. PPO looks like it's a little bit negative, but just keeps trending higher. Don't see any big reversing candles. So I'm okay with ZS for now. And that is it. I made it through 100. Didn't quite get it through it by 9:30, but that was a lot for 100 stocks. Anyway, that's kind of how I see the longer term view, looking at those weekly charts, and we'll see how we go from here. But overall, most of those charts still looked pretty bullish to me. Several did have negative divergences, but we got to see corroborating evidence, and we just don't see it right now. So anyhow, I think it's market goes higher until it tells us differently, until we see at least a reversal, something that sticks. So that's it. Anyway, that's it for me for this week. I'll be back on Tuesday for your next Trading Places Live. Please hit that like button below. Hit the subscriber button. We'd love to have you on board as a subscriber, and make sure that way you can check out all the latest here at EarningsBeats. But have a great rest of your day, rest of the week, and enjoy your weekend, everybody. Be safe. Happy. I was going to say happy holidays, not holiday. Happy trading. Have a good one.